cannot add all, because you're gonna have 11, but that's not, the most you can add, subtract is 100, okay, don't get confused. So it's, okay, so, and that's that's the minimum you should get for your exam 3. Assuming you're gonna use your exam 3 to replace your exam 2. But if you did really well on exam 2, you can also subtract exam 2 grade. Then you get, okay, how much you have to get, okay, for some who did really, really well, okay, they don't have to get much on exam 3 in order to get A. But you can, okay, use this formula to calculate, so hopefully that will help, alright? I'm gonna, okay, so, I'm gonna consider whether to curve, hopefully I don't have to, okay, so and then right up here, before I'm adding the 6 point. So that's why I make sure, okay, you do not feel like the 6 point will make a huge difference. I'm gonna look at and evaluate the class average before I'm adding the 6. So the 6 is really a reward for your hard work throughout the semester. Does that make sense? Right, so it's, if you, okay, so this, finishing the homework is not an easy thing, right? So especially, okay, keep getting, 100%. So then I'm gonna add the 6 point. I won't promise I'm gonna curve, as far as I see, because you saw the distribution, right? So it's all skewed to the right. So my bet is I'm not gonna add any points, but if but in case, okay, if you really, really bad on the exam 3, and then probably I have to. But I hope that's not the case, because the exam 3 shouldn't be as hard as, okay, I still think the exam 2 is the hardest.
No, it's not.
But I was surprised that some people in the class actually think the exam 1 is the hardest. So it's up to you, you will, okay, figure out, which exam is harder. Okay, so this is basic, and then the way I actually get the letter grades is based on syllabus, so everything is in the syllabus. Okay, so I'm not changing anything. Any question? All right, sounds good. Okay, so, exam 3, that will be next week, right? So next Thursday, 10 a.m. Okay, so you do the same thing, you go to the module, and then you access the exam there. It's a lockdown. Make sure you have run your computer and everything works before the exam. We have the usual instruction. We're gonna post this instruction on the website, so you will get the information. So this is again, you have to show your ID and calculator. And then don't write a lot on the scratch paper, because I'm not gonna grade the scratch paper. So it's the same usual thing, all right? All right, so exam 3 is gonna be 90 minutes. So now we don't have the pressure to, like, we have to let the other class in. So that's why, okay, so I said it only 90 minutes. So that will be, okay, because we have a lot of concepts, that will be 25, so this is basically 10 to 11:30, right? So it will be 25 multiple choice and 7, okay, short answer questions. So hopefully you feel like this change, okay, towards your advantage, okay? So you kind of have a little bit more time to do the, okay, short answer question, but don't take your time, okay? It's still kind of, okay, pressure on time. Don't think that you get extra time, you have one question less, then you can take your time, okay? Still, okay, do exactly the same intensity, and make sure you get all the questions. You even have some time to check your work, okay? The points wise, okay, so that will be 40 points on the, okay, so it's 40 and 60, okay? So I'm not changing so it's still 1.6 for multiple choice and 8.5 for short answer question. You probably will notice that there's a half point, okay? It's 99.5, they added up. So I'm giving you the half point, okay? I'm not gonna fuss about the half point. But that will be, okay, signed on the, okay, so I don't have any place to put. So I put that on the formula sheet, okay? So you're gonna get a formula sheet. at the beginning of the test. So this is what I set up, okay, so the formula sheet is gonna be on the top. That doesn't change. You can, okay, whenever you need the formula, you can go scroll up and then look at that. And then the first part, because you probably will refer to the formula, I'm putting all the short answer question there, then followed by the multiple choice. Okay, so the format should be similar to the second exam. Okay? All right, I will come here for the 128, just, okay, try to, okay, hold this room, so nobody, okay, so then, in case you wanna, okay, take a test here, suppose you have other tests on campus, you can, okay, come to this room to, if nobody comes, I will just, okay, do my work here, so it doesn't really make a difference, but just make sure, okay, this room is available, okay, so second exam, I got a lot of emails about people have, okay, internet, okay, glitches, okay, they have problem. So if you worry about your internet problem, you should, okay, take advantage of this, okay? All right, so, that is the, okay, instruction, okay, so concept-wise, all right, so, again, so this exam have lots of concepts, okay, so make sure you study for the summary slides and the textbook, all right? So, and then look for the definition, at least, okay, read those definitions. Short answer question, and then make sure, you do, okay, you review. I know, okay, some of you probably wanna give up on homework 11 just because you don't need the grade for the, okay, for the class. But, make sure you do homework 11, cause it has the, okay, chapter 20 work there. If you read the, okay, the review notes, I didn't put any chapter 20 homework, okay, or problem here, because I think, okay, so homework 11 is sufficient for you to study, okay, so even you don't plan to do this, okay, 100%, once the copy of the homework is available, you should, okay, work on those, okay, at least look for chapter 20. Okay, so then those are the, okay, common usual things, right, so the problem in this, okay, review sets, and then also the similar homework and the assessment, and then just, okay, try to do this, several times and make sure you really internalize the material. Practice a lot, okay, you have time, okay, to do that, okay, so make sure you, okay, schedule your time. I know you have lots of, okay, several tests to prepare, but spend, okay, sufficient amount of time on cost accounting. So this is I'm gonna post this, okay, so this is the summary slides for 9, 10, 16, 23, okay, so that will help you with the concept. And this is the, okay, calculation. All right, so then this part is the chapter 9. So this is, chapter 10, and this is the chapter 16, and chapter 20, okay? So make sure, okay, you study those, okay, lots of journal entries, okay? So if you are weak on journal entry, this is really the time you should study for journal entry, okay? So make sure you know how to journalize. All right, I'll talk about the formula sheets already. Any questions before we move on? So this should be, okay, relatively clear, right? I think computational wise, chapter 9 probably is the hardest. Okay, chapter 16 is the tedious. Okay, so lots of concepts, little small things you have to pay attention. So you will notice that when I start working through the problem. All right, so if there's no more questions, so I'm gonna, okay, go through the question in some order. Okay, so the first thing I'm gonna do is question 1. Okay, so we talk about this, which is very similar to the homework, but I wanna, okay, emphasize this one more time, go through this one more time. All right, so for overhead, all right, so you have to be clear. There are lots of, okay, standard information or budgeting information you have to figure out, which will be useful. But that doesn't necessarily mean you have to do this right away. You know where you thought you need those information, but those information all based on, okay, the box, the information in the box, okay? So this is basically, okay, SVOR, SFOR, budgeting fixed overhead, okay? So sometimes you you also get, okay, standard hours, okay, standard hours allowed, okay, per unit. So you need all this information, alright? Make sure, okay, so those are the information you can get by, okay, looking at the information in the box. Alright, so, let's look at, okay, and then down below, this is basically all the, okay, actual information. So it asks for actual hours. So one thing, okay, I wanna stress is actual hours only used in variable overhead variance calculation. Okay? Does that make sense? Okay, fixed overhead variance, we do not use the actual hour. So when the question asks you for actual hour, I'm not gonna look at, okay, fixed overhead. I'm looking at the variable overhead, okay? Oh, by the way, how many of you have already done the, okay, problem set? Anybody? Yes? Any errors? You find any errors, mistakes in the solution? No? Yes? There's one error so far, I know. Intentionally or unintentionally. So I have been waiting for, okay, so anybody who works through the question and then, okay, tell me that. So at least I know there's one. I don't know whether there are more. Make sure, okay, you double check with the, okay, the answer. Alright, so that's the actual hours, okay? And then we have the standard hours, so this is basically the second question, right? So the standard hours allowed per unit, and then we get a, okay, variable and a fixed. So the one thing, okay, I'm gonna do 1 and 4 together, okay? Because I need to do the actual hours based on the variable overhead variance, alright? So then this is, okay, basically set up the problem. So we get the actual SVOR, okay, and the SVOR time SH. Alright, so that's basically, okay, in your mind, you have to be really, really clear, this is what you need, need to, write down. Alright, so the actual, we already have that, okay, so I'm just gonna write that. So that's a 41,335, okay? So then we also have the, okay, variable overhead spending, so that's basically the, okay, the difference here. So that's a 23, so that's a negative 2,300, correct? Okay, given this information, so I'm able to calculate this number, alright? So then this number is basically, okay, 43,335 minus, okay, negative 2,300, right? So then you should be, okay, so this is basically, okay, 41,335 minus, okay, let's say this is, okay, a question mark, right? So this box, right? So that equals negative 2,300, right? So then to calculate the box, then that's basically, okay, you use a 41,335 minus 2,300. Alright, so that is, okay, so 30, wait a second, do I have that number?
Says the 41,335 is the fixed.
It's a fix, okay, no
Yeah.
wonder I was doing this wrong. Alright, so, let me, okay, so, oh, this is 7, sorry. So it's a 7,000, alright? And then the 23 is correct, right? So then I'm just gonna, okay, switch this, alright, so then that will be, 7,000 minus 23, so that's 93. Okay. Alright, so that is, okay, so how you get, okay, the second one. Now, okay, so in order to get AH, I have to get SVOR, right? So the SVOR, so then this is basically, I will come back to here, to my original information. So I get 80,000, 10,000, 120, and 30,000. So that's basically the line, right? So then I get, okay, so 80,000, okay, 10,000, so I'm gonna use 80K, 10K, okay, 120K, and 30K, alright? So then this is overhead equals fixed overhead plus SVOR times direct labor hour. Alright, so then all you have to do just, okay, so I can get, okay, SVOR, okay, by looking at, so if I do, okay, 1 equation, alright, so that's, okay, so that's how I get. So then, okay, so you can solve this is a system of equation, right? So you can do that, or you can just, okay, let me calculate the slope. So the slope will be the difference in overhead, alright, divided by the difference in direct labor hour. So then that is 2, okay? So SVOR is 2. So notice I'm using the information in the box, right? So to get SVOR. Alright, so then I'll come back here. So given I know the 43, so now okay, then I can calculate AH will just be 93 over 2. That's it. So that's question number 1. Alright, so now question number 2, okay, so question number 4, I already have the spending, I need to get the efficiency, right? So to get the efficiency, which means I have to get a SH, alright? So to get SH, I do not have enough information for variable, okay, so then I need to variable overhead efficiency. So variable overhead variances. So then I need to use, okay, fixed overhead. Alright, so then I'm gonna come back here, so I set up the structure for fixed overhead. So then that will be actual, which is 41,335. I have the budgeted, alright, so then I have the standard, okay? Now, I also have the information of this, okay, the fixed overhead variance, that's the sum of spending and the volume. Okay, so that's a 2,500. So that basically means in my picture, that's this. Okay, so that's 25. Okay, so now given this information, so I'm able to calculate the standard. So the standard will just be 41,335 minus 2,500. Okay, so then we get 38,835. All right, so that's standard, but the standard is also equals SFOR times SH. Okay, you kind of have to be really clear about the definition, right? So you get, okay, 38,835. So then I need to get, okay, so now immediately in order to calculate SH, I have to get SFOR. So SFOR, I come back here. So it says the standard variable is 7. So then SFOR will just be 7 minus 2, that's 5. Okay? Alright, so then given I have, SFOR, then I can come back here. So then SH will just be 38,835 divided by 5. Okay? Alright, so that's 7,767. Alright, so given I have, SH, then I can come back here. Alright, so then this will be 2 times 7,767. Alright, so that is how you, so once you calculate this, you know this, then you should be able to get efficiency. We okay? Alright, now, so this is okay, we are done, so this is number 4, alright? So we are done with 1, 4. Now, given we have SH, alright? Now, SH is the standard hour allowed, okay? So standard hour allowed per unit, okay? Multiplied by the actual units. So this is important. Okay? Alright, so now, given we know SH, given we know actual units, so then we can calculate standard hours allowed, okay, per unit. Alright, so then that will be 7767 divided by the actual, which is 4315. Alright, so that's how many, okay, so standard hour allowed per unit. Alright, so this is, okay, number 2. Okay? Now, okay, the last thing we need to do is basically figure out the fixed overhead, right? So I'm done with 1, 4, 2, and then now, okay, so this is a fixed overhead spending and volume. So to do that, and then I need to figure out, okay, so budgeted. So the budgeted, you go back to here, again, I'm using the information in the box, right? So in the box there, so then this is the slope, right? So then you can, since you already know this is the intercept, since you already know the slope, you can use either one. So the budgeted fixed overhead will just be, so I'm gonna use, okay, 80K minus 2 times 10K, alright? So that's a 60K, okay? Alright, so then come back here, so this is a 60K, alright, so then you are all set, right? So then this will be, okay, so this will be spending variance, and this is volume variance. And then of course, if you calculate the spending variance, you use 2500 minus the spending variance, you get a volume variance as well. Alright, journal entry. So I'm gonna go over journal entry one more time. So there's, okay, so first one is the, okay, this number. So this is a debit, fixed overhead control. Alright, and credit. So once you set up the problem in this way, it's right in front of you. And credit various accounts. Okay, with this information, 41,335. The second number is this number, the standard. So then that will be debit, working process, so 38,835, and credit, fixed overhead control. And the third is the spending, okay? So the spending is, do I have that information? I probably don't. Oh, I do. Okay, so, oh, I don't. That's not the same question. Alright, so this will be, okay, you have debit or credit, depends on it's unfavorable or favorable, and then the other one will just be, okay, fixed overhead control, right? And the fourth one is the volume. Okay, so then you just, okay, have 4 journal entries, always 4 journal entries, okay, for overhead. So hopefully, okay, this is clear, right? So you wanna put the information in front of you, then, okay, so the journal entry look, okay, pretty obvious. Alright, the next question, I wanna, okay, look at the, okay, so I jumped ahead to, okay, question 11. So question 11 is also a different way of showing you the question, but the idea of solving this is exactly the same, okay? So you still have to use all this information in the box, okay, to do the calculation, alright? So that's the, okay, the standard, okay? So you still have to, okay, use that to solve the standard. Alright, so, let me set up the problem first. So this is a variable and fixed. You have to calculate those anyway. So I'm gonna, okay, get, okay, actual variable overhead. I'm gonna use the information in front of me. Alright, so then that is 100,000. Alright, so then we have SVOR AH and SVOR SH. Alright, so that's how you, okay, set up. Okay, so SVOR, okay, so standard, so this is called standard variable overhead per direct labor hour. So this is SVOR. So this question gives you different information. It gives you the practical capacity. That's basically, okay, how much the normal capacity the company, the manager expect you to do, alright? So that's 20,000, alright? So then it's meaningful to compare that with the actual units. Where if you look at this first question, it did not give you the practical capacity. It only give you some random number, okay? By the way, if you do 10,000, okay, direct labor, your cost will be 80,000. It give you some random number. But then the question, 11, it gives you the practical capacity. For 20,000 units, you will require 25,000 direct labor hour, and you will require 170, overhead costs and so on, okay? So that's why you can directly calculate the variable overhead, which is 95, okay? and divided by the hours, 25. Cause you know, okay, we spent 25K, but then the cost is 95, okay? So then that is, okay, 3.75, hopefully that's correct, I'm gonna double check. No, it's 8, it's 3.8. Alright, so that's 3.8, alright? And then, okay, and then I want you to, okay, make a contrast with standard variable overhead per unit, alright? So then that will be, okay, so 95K over unit, which is 20K. Alright? So make sure you understand the difference of this, alright? So now, okay, so there are a couple of ways, okay, so then first of all, I can calculate the, okay, the last line. So the last line you can calculate in a way of standard variable overhead per unit and multiply by the actual units. So you can calculate in this way, alright? So then in this case, that will be 4.75 times the actual. So the actual is 18,500. Okay, so that will be one way to calculate that, 18,500. Okay, so that is 87,875. Alright, so from here, you can directly calculate, okay, so you can calculate SH. But I'm not, okay, I don't need that, okay, so, and then, so okay, so now I need to, okay, the middle part, okay, so the trouble is still, I need to know the AH and SH, correct? So then one way you can do is, I come back here, alright? So then this information I need, okay, so this is a new way to show you the difference between AH and SH based on LEV, alright? So LEV, alright, so that's SR, AH, SR, SH, correct? Alright, so then the difference here is 26, 25 favorable, so that's why it's negative, okay? So then you can get, notice though, okay, if you write in this way, okay, so this is a SR, correct? And then if you look at here, this is a SVOR, correct? So then you can calculate, okay, I know SR is given, that's a 3 per direct labor hour. So then this is basically 3 times AH minus SH, that will be negative 23.25. I can directly calculate SH minus, AH minus SH is negative 875. Alright, and now, I'm pretty much all set, okay? The reason I'm all set is because here, I can already calculate variable overhead efficiency, okay? Variance, because that will just be SVOR, okay, I'm gonna write, okay, SVOR times AH minus SH, correct? So then that will be 3.8 times negative 875. So that's one way to do this. But then the trouble is, I still have to get the spending, right? So spending, I still need to get the AH. So what do I do with that? Okay, so then I need to figure out SH. So SH, there are two ways to figure this out. One way, you can actually, you can use this, right? So SH is standard hour allowed per unit multiplied by actual units. And standard hour allowed per unit, again, is okay, information calculated from the box. So standard hour allowed per unit. Alright, so it's hours, 25K, divided by the units, 20K. Okay? So 25 divided by 20, so that's 1.25. So all you have to do is, well, so standard hours, alright, so I'm gonna calculate this here, is 1.25 times 18,500, okay? So that's 23,125, alright. Alternatively, you can also calculate, so I'm I'm just, okay, throw in, okay, something. Alright, so I can also calculate SH as 87,875 divided by SVOR, which is 3.8. So you get exactly the same answer. So either way works, okay? So depends on what information you need to use. But then because I have to, okay, calculate AH, okay, so I need to, okay, figure out the SH. So now given SH is 23,125, so calculate this. So this number should also be 23,125, okay? So check that, okay? So make sure you do, okay, you check this, okay? All right, so then we can get AH will just be 23,125 minus 875, okay? So that's 22,250. All right, so 22,250. Okay, go back here. All right, so then that will be 3.8 times 22,250. All right, so now you get, okay, you are all set, right? So you have the spending, you have the efficiency. There's a lot of information, okay, going about, right? But then it's all about, okay, do you know SVOR? How do you calculate SVOR? How do you calculate SH? How do you calculate AH, right? So that's the only three things you have to figure out, okay? And notice SVOR and then SH have something to do with the budget information it gave you. All right, so fixed overhead. So fixed overhead, so I'm doing the same thing, okay? So the actual information is 74. All right, and then I have budgeted. Okay, so because I have the practical, so notice the difference, okay? The budgeting is always for the practical capacity. Because I already have the practical capacity given to us, so the total overhead is 170 and minus the variable, the budgeted variable, then you get the, okay, budgeted fixed overhead, okay? And then you have the standard. So the standard fixed overhead, so I think the easiest way of doing this is using the units, okay? So then the standard fixed overhead per unit, all right? So that's the easiest because then you don't have to multiply SH in case you only have to calculate that. So then that will be 75,000, that's 170 minus 95, all right? So that's the 170 minus 95, that's 75 divided by 20, okay? So 20,000. Okay, so that's 3.75. Okay, so 3.75. Okay, so come back here. 3.75. This is calculated times 18,500. That will give you the standard fixed overhead. Okay, so this is different from, okay, you have to get the overhead rate. Okay, so the way I put those two questions, so because the information can be different, right? So you cannot just say, do I have to use SFOR? Okay, what about the overhead rate? Then you have to go through all the facts. You don't need to do that. You have to be, okay, so you should be, okay, flexible enough to figure out, okay, so to, based on the information given to you, to figure out. Okay, so the budgeted, if it already give you the capacity, the budgeted fixed overhead will be given to you, basically. But if it only give you the line, right? So if only like, okay, giving you the line like this, right? So then the budgeting will just be the intercept, right? So you kind of have to calculate that because the question did not give you the capacity. Okay, so make sure you understand that, right? So the budgeting has to be, okay, fixed overhead have to be matched with the, okay, the capacity. All right, so I think that's okay. So you should be able to, okay, verify the numbers. Okay, so you need to, okay, calculate those on your own. All right, so now let's move on to, okay, so question 3. So which is the material and the labor, all right? So again, I want to, okay, emphasize, okay, so the standard cost. So I give you the bare minimum, right? So this is the bare minimum you can have for standard cost sheet. Just try to, okay, alert you. You understand what the information should come in, okay, about from this standard cost sheet, that will be the standard, right? So you should have standard price for material, so that's 32.4 divided by 6, correct? So that's a 5.4. You should know standard rate, right? So that's 27 over 1.5, so that's 18. You should also know the 1.5 will be the, okay, it's the cost driver for variable overhead. So then you get SVOR, that will be 6 over 1.5, that's 4. Okay, so those are the, okay, basic information from the standard, and then the rest will be the, actual. Alright, so this should be easy, alright? So direct material, the only thing you have to, okay, pay attention is whether the units purchased is the same as the units consumed. So you have to pay attention to that. If they are the same, you have 3 lines. If they are different, you have 4 lines, right? So you have actual, alright, so you have SP times AQ, suppose this is a purchase, and then you have SP times AQ, suppose this is used, that's a requisition, and then SP times SQ, alright? So the actual is given, so that's 725, 744, okay? So I'm going, okay, so then this is, okay, B, right here, right? So you get 725, 744. Now, I see, okay, you have a total material purchase, 135, 400. You also have the total requisition. So then I know those two numbers are different, so that's why I'm having, okay, so two different lines. All right, so SP is a 5.4, we already calculated that. So that's a 5.4 times 135, 400, okay? And then 5.4 times 130,000. So that's the only, so those two are the things that you should pay attention, right? So you make sure, well, so I need to pay attention because whatever quantity I consume will be used to calculate the usage variance. Now, for the last one, usually, okay, so this is confusing because you have to calculate SQ. This is my suggestion. You always have 3 numbers here, okay? So you're gonna have SP, which is a 5.4. You're gonna get the number from your cost sheet. SP and 6, all right? And then you're gonna have the actual, 2,600. So that will be, so this will be the easiest because 6 times 2,600, that's SQ, right? So instead of, okay, fuss about SQ, you might, okay, look for what's my, okay, SP, what's my quantity, okay, unit quantity, the quantity per unit, what's my actual units? Your actual units is always gonna be in the last line, right? So then this is SQ, right? So then this will be, so at 5.4 times 6, that will be the standard material cost per unit, right? So don't worry about the formula, worry about, okay, you need to have 3 numbers here. So if you don't have 3 numbers here, then that's a problem, right? So then that's, okay, so this is how you get this, okay? So then that will be MPV, and this will be MUV, right? Now, journal entry, okay? So this is basically, so we're done with, okay, 1 and 2. Okay, so journal entry wise, all right, so then we have 1 journal entry, okay? So basically, so this is the purchase, okay? So this is the purchase, so let me see, okay, so that's the material acquisition. So this is number 3, all right? So this is, okay, number 3 journal entry. Let's see. All right, so it's right in front of you, okay? So you have credit accounts payable by this, and then you debit material, okay? And then depends on this is, okay, so favorable and unfavorable, you're gonna debit and credit. So that's right in front of you, 3 numbers, and make sure, okay, debits equal credits, that's it. All right, so the next journal entry, all right, so that's a requisition. So that's again right in front of you. We are looking at this part, okay? So then again, it's debit, so this is okay 4. Okay, so we will debit, we'll debit working process for this number, okay, so for this number, and then we will credit materials, okay, and then, MUV is debit or credit, depends on it's, favorable or unfavorable. So again, right in front of you, right? So it's very easy to study the journal entry if you set the problem correct. All right. Now, direct labor. Are we okay? Question? So direct labor. All right. So it's actual. Okay. So the only reason I want to go through this is because I want to make sure, you see the 3 lines, 3 items in the last line. All right, so you have SRAH, that's easy. SR we already calculate is 3,500. And you also have SR times SH. But instead of doing this, I have 3 things, right? So you have 18, you have 1.5, and you have the actual. Right, so notice you have the actual units there, right? So you have the SR, you have the unit quantity for hours per unit, and then you have the actual units. Okay, so then so that always 3 things. All right, so then this is LRV and then LUV. All right, so then the journal entry is even easier, right? So you have debit working process, and then for this number. And then credit wages payable, okay? And then you're gonna debit or credit, the variances, all right? So depends. So that's it, right? So you have 4 entries there, right? So that's 1 journal entry. So I think that's a 6. So this is 6, okay? All right. So I wanna emphasize, this is exactly the same. Okay, when we do variable. All right, so I'm gonna do it here. All right, so variable overhead. So the actual, all right, so it's 120. All right, so then we have SVOR, times AH. So then that will be 4 times 3,500. Notice only when variable variance we are gonna use actual hours. And then we also have SAOR times SH. Now, 3 items here, okay? So you have 4, 1.5, and 2,600. See, the last term, you're gonna have 3 terms applied to material, labor, and the variable overhead, okay? So then you get, so spending and efficiency. So that's how easy this is. Okay, so now you have, then of course you have to separately, journal entry wise, all right, so you have to separate, so I'm doing 1, and then 2, and then, so this is 3 and 4, right? So 4 entries here. Right, so this is basically, this is the fixed overhead, variable overhead control, but then the other one is various account. So this is working process of fixed variable overhead control. Variance, variable overhead control, variance, variable overhead control, right? So every single entry you should have variable overhead control. See, that's not so bad, right? And then closing entry. So you close all the variances account, right? So to COGS. So make sure you know how to do that. So this is a lot, but it's, if you study, if you practice, go back to the homework, right? So try to do the problem on the paper and pencil, then that will help you to, visualize, the numbers, the information, what information you have to use, and then the more you do it, and then the easier it gets. All right. Question number 2, so this is CVP. Very tedious question. It has a lot. I'm gonna go through, some of that, quickly. So you're gonna see there are several problems you need to pay attention, so the first question, contribution margin income statement. have to know the structure, right? So that's the sales minus variable expenses, right? To give you contribution margin minus fixed expense to give you operating income, right? So you have to know the structure of this, right? So then the units you're gonna use is 120,000, right? So give you the per unit, right? So you use 120,000 times 25, then 120,000 times 12, then you have the fixed expense. So that's pretty easy. Now the second question, all right, so contribution margin per unit, right? So contribution margin per unit, so that just be 25 minus 12. That's a 13, okay? So I want you to, study the component of this, right? So by studying the question, you understand the definition, right? Material, labor, variable overhead, and variable selling expense, right? You have to add a variable selling expense in order to get a, total variable cost. Now, contribution margin ratio, okay? So that's 20, that's a 13, so this is basically contribution margin per sales, okay? So 13 divided by 12, 25, so that's a 52. All right. Number 3, determine the dollar. So this is a break even in sales, right? So dollar means, break even in sales. All right, so you use the fixed expense. So this question, the fixed expense has, there are 2 fixed expense. You have 430, 500, and 159, 050 divided by 0.52, right? So that is, the break even in sales. So I'm gonna, because we have to use this, I'm gonna give you the solution. All right, so number 4 is the margin of safety, okay? So margin of safety in sales. So all you have to do is using the current sales price, which is 25 times 120, okay? So this is where you are, minus the break even, so 1,133,750. That will give you margin of safety in sales, right? But then if you divide it by the current sales, so that will give you the percentage. So this is the percentage, so margin of safety in percentage. That's how you calculate this. Okay, without the divide, that's just margin of safety. Divided by the where you are, you get a percentage. Okay, so margin of safety in percentage is easier to use. Okay, so that's why, usually we will talk, do you have, 10% margin, 50% margin, and so on. Now, number 5, DOL. So DOL is contribution margin over operating income, right? So I do not have, so its contribution margin is 13, times 120, so that's contribution margin. And then operating income is, so contribution margin minus fixed expense, all right? So if you do this, you should be able to get 1.61, so because you already have, fixed expense, I already give you, right? So this is, this plus this, that's a fixed expense. So you just plug in, so you should be able to get that, right? So that's 1.61. Now, how do you, use this? So I'm gonna jump to 7. So the 7 says if sales increase by 25%, when sales increase, operating income will increase. So then you can directly say operating income increases by, 1.61 times 25%. All right, so that's how you use DOL. But if you, do not know how to use DOL, when you look at question 7, you say, sales increase by 25. So which means I have to, increase by 25. That means, the total sales will be 120 times 1.25. You get the new sales, then multiply by contribution margin ratio, and then divide, minus the fixed expense to get a new operating income, and then you do that there. So it will take, so 3 times of the time to do this, right? So, but if you know how to do DOL, it's just, 1 step, Number 6, only thing you have to, pay attention, okay, so this is, okay, something, so it's a target in sales, I think, okay, how many stands, so it's a target profit in units, okay? So it's in units, so whether that, okay, the reason is, it matters because you have to divide it by 0.52 or you divide it by 13. Alright, so then you have, the target profit, so that will be, so I use the fixed expense, alright, plus, okay, 575 is after tax. Okay, you have to pay attention to convert that into pre-tax, because when we think about production, right, everything is before tax, so that's the way to think about, right, so we need to filter out the tax effect, then divide it by 13. Okay, so that's how you get it. So that's the, okay, that's the one thing you have to pay attention, is this pre-tax or after tax? Alright, so question number 4, mix and yield. Okay, so this is another, okay, hard problem. Alright, so I'm gonna only show you my way of doing this, which I think is easier. Then I'm gonna show you how to apply the formula, okay? So, so for this type of question, alright, so this is, okay, so the first thing is, you have to understand MUV equals mix and plus yield. Alright, so which means, okay, among the 3, if you are comfortable to calculate 2, you are done with the third one. You do not have to calculate all 3. But my way, everything is in front of you. Now, so given this, okay, so this is my baby model, okay? So 5 units in, 25 units out. Okay, how do I know it's 5 units? 2 plus 3. Okay, 25 units is the, okay, yield out, okay? But the actual, okay, so I'm looking at 22 and 43, so that's 65K in, alright, 320K out, alright. So based on this model, we calculate SQ on the right side, we calculate the standard yield on the, okay, on the left side, and the standard yield on the right side, alright? So how do you, okay, so this is basically, okay, if I want to calculate SQ here, I'm gonna start with the 320K. 320K divided by 20, divide and multiply. Divide 25 and multiply by 5. If I calculate standard yield, I'm gonna start from here. So 65K divided by 5 and time, okay, 25. So that will be the easiest way to, okay, without thinking, you can just directly calculate. So standard quantity is 320K divided by 12 and time 5. 25 and time 5. Divide and time. And then you get, okay, 64. Alright. So let me show you, okay, my way of doing this. Alright. So I think, okay, so this is, okay, an easy way. Alright, so it's, okay, the first one is SP time AQ time actual mix. Alright. And then the second is SP time AQ time standard mix. So the difference between 1 and 2 is just mix variance. The third one is SP time SQ time standard mix. Alright? So now, okay, so given, okay, this is the setup, alright, so then I can do, well, so SP is given, is right here, right? So this is SP, right? So 20 and 12. Okay, and then AQ, so this is AQ, so the total AQ, alright, so is 65K. But you do not need to calculate the actual mix because 65K times the mix, you get the 22 and 43. So that's why I can directly get, okay, 20 times, I need a question column so I don't have to put that in close. So that's 22,000, alright, and 12 times 43. So that's the first line. So the second line, the standard mix. So then we have, okay, 2 and 3, so that's a 2 over 5 and 3 over 5. That's the standard mix. Alright, so then you have 20 times actual is, okay, AQ is 65, okay, times 2 over 5, okay, 12 times 65, and times 3 over 5. See how easy this is, right? So all the information information are given. And then, okay, so the most easiest one is the last one, cause all you have to do just replace AQ by SQ, but SQ is a 64K, okay? So all you have to calculate is SQ, alright? So 64K times 3/5, alright? So that, okay, 1 and 2, that's mix. 2 and 3, that's yield, okay? And then 1 and 3, so that's MUV. So that's how you do this, okay? The only thing which is harder, okay, which you have to calculate is the 64K. Okay, so that's the, okay, you use your baby model to do that. Now, let me show you how to use the formula. Alright, so if I use the formula, mixed variance will just be, so 20 times, okay, so actual minus 65K times 2/5. And then 12 times 43,000 minus 65K times 3/5. So that is exactly the same as 1 minus 2, right? So 22 minus 65K times 2/5, 43 minus, okay, 65K times 3/5. So that's exactly the, okay, 1 minus 2. Now yield looks very different, okay? So the yield ratio, so yield, you kind of have to, okay, do a couple of things. So the first thing you need is SPY. So that's the standard cost per yield. You go back here, so this is the standard cost, 76. In order to produce 25 units, okay, so you spend 76, okay, 40 plus 36. So then the SPY is 76/25. So that's your SPY. And then you need to calculate the standard yield. I don't think, okay, you can calculate yield ratio and all that, so, but I think, okay, my way is easier. I'm calculating standard yield, I'm doing the trick as here. 65K divided by 5 times 25, okay? So that is, okay, so 65K divided by 5 times 25. That's your standard yield, okay? So then the yield variance, you have to, okay, remember, it's SPY information, so 76/25 times, okay, you have to use the standard yield, so that's a 65K/5 times 25 minus the actual, because the yield is like a revenue, right? So the higher the better. In order to make sure the negative is favorable, you have to use, okay, so the standard minus the actual. 320 is the actual, so 320,000, and that's the, okay, that's the formula you have to use, okay? So you're welcome to use the formula, you're welcome to use whichever way you feel comfortable, okay? All right, that's mix and yield. Question 5. Question 5 is EVA. We have done, okay, similar question in class, we have done similar question in the homework. The one thing I will, okay, try to, okay, so point out, this is, okay, something you pay attention is, you have to get the after tax, okay? After tax operating income, so that's 1.5 million times 1 minus 40%, okay? Everything else, okay, the WACC is calculated exactly the same way. The total capital is calculated exactly the same way. So I saw you guys how you did the homework, so I think that you are pretty comfortable doing this. All right, question 6. So question 6, okay, so this is also easy. Okay, the DuPont is basically margin times 10 over, okay, and equals ROI. Okay, so that's, okay, something you have to pay attention. All right, so here we use a bunch of, okay, those information. Okay, first of all, so I'm gonna calculate the north. All right, so first of all, based on DuPont, I can calculate asset turnover as a 16% over 0.8, right? 0.08. So that's asset turnover. Now for A, I can calculate as sales as, so it's operating income over, okay, so over margin, okay, 0.08, okay? So that is, okay, so that's the sales, okay? So that's, 40,000, 400,000, sorry, 400,000 divided by 0.08. Now, for operating asset, you can do two ways. You can use the return on investment, or you can use, operating income. I can use return on investment, that will be 400,000 divided by 16%. Or, I can use the asset turnover, so then that will be sales, okay, so and then that requires sales divided by, okay, asset turnover, okay? So which, okay, both numbers I do not have, I need to calculate that, right? But then, okay, so either way you can calculate this, based on the information given. Alright, so I wanna talk about second one. Okay, second one is, if the asset turnover is increased by 40%, margin decreased by 30%, how would the ROI be affected? Now, before the change, ROI is 16%, right? So what you can do is, for, okay, margin decreased by 30%, you use 0.08 times 70%, right? Then you get, okay, when you have the asset turnover, then you use, okay, multiply by 1.4. Then you multiply together, you get a new ROI, and then, okay, the new ROI minus the 16% divided by 16%, you get this number, right? So that will be a long way to calculate that. An easy way to calculate this is, okay, so the change, normalize everything to 1 initially, okay? So the margin is increased by 40%, and then asset turnover is decreased by 30%, and minus 1, that's it. So it's a negative 2%, that means ROI decreased by 2%. You can double check on that, okay? So that will be, check yourself, okay? You can try to use a long way to do that, okay? See whether that's indeed. But that's basically a shortcut of doing this. Alright, residual income, alright, so I don't have to, so this is easy, right? So just to review, so residual income will be, so given you already have the operating income, which is 10,000, and then all you have to do is 8% times the average operating asset. Alright, so that is how you calculate residual, income. Alright, transfer price. So transfer price, this is a cost base, alright? So for question number 1, it's a variable cost, okay? So you have 1, 2, 3, and 4, okay? So this is what? Okay, adding them together, and then multiply by, okay, multiply by 120%. Product cost, so then you just have 1, 2, 3, 4, okay? And then plus a 400. So that's pretty easy, right? So you just have to know the concept. Now 8, alright? So the 8, this is opportunity cost. So opportunity cost, you have to worry about whether you have capacity, idle capacity. Case 1, there's no idle capacity. You produce 10,000, you sell 10,000. In order to sell internally, you have to okay, forego the opportunity to sell externally. That's 100. Okay. So this is why, okay, so case 1, there's no idle capacity. All right. So then the minimum transfer price, this is for division A, will just be, you can go through the option 1, option 2, go through that. That will be 100 because you actually gave up of selling to the external. Now maximum is for the buyer, so that's for B, alright? So you can purchase 90, okay, but then you have to pay 2. Internally, you do not have to pay 2. So the maximum, it will be 90 minus 2, that will be 88, alright? So now, if you draw the picture, alright, so I have 100 minimum, so which means this is okay how much I wanna sell. So 88 is the maximum, that's how much okay I wanna buy. There's no overlap, so no trade. So which means there's no transfer price. Okay. Now case 2. Case 2 I'm gonna do here. So case 2, exactly require 4,000. So which means I do not have to give up 125. All I have to do just produce more. But produce will cost, okay, resource. So that's why the minimum is 72. All right, so case 2, so the minimum is 72. You have to understand why, okay, this is not 125, okay, because we have to produce instead of not sell. And then the maximum is exactly the same as before, so that's 93, okay? So then we get, okay, so this is, okay, 93, and this is buy, okay, so, and then 72, this is sell. When you get confused, it is a minimum or maximum, you have to think about, okay, if I sell, that's my revenue. The sky is the limit, right? So I only have a minimum revenue I can accept. So that's why minimum. I do not have a maximum revenue. But when I talk about I'm buying, that's my cost. I have a maximum cost. I do not have a minimum cost because you can be as low as 0. Okay? All right, so, but now, okay, so this question is not very nice. It has a 60%, okay, it's not 50-50. So how do we deal with this? So the total benefit, so the internal benefit, all right, so in this case, is 93, so this is per unit, all right? So it's 20, okay, 21. So now 21 times 60%, so that's a 12.6, okay, that goes to A. 21 times 40%, so that is, okay, so 8.4, that goes to B, all right? So given this information, so I'm gonna put it here, 20.6, 8.4. So they add up to 21. Now, okay, the transfer price optimal will just be, you can go either way, okay? You can either go from 72, I'm adding 12.6, so that's basically what the division A gets. Or I can use 93 minus 8.4. So it's either 72 plus 12.6 or 93 minus 8.4, okay? So then either way you get 84.6, okay? So that's how you, okay, determine the transfer price. All right, so that's 8. Any question? All right, question 9. So question 9, okay, margin of safety in units. Okay, so this is a little bit tricky, right? Because you have all this, so this is, okay, so in order to do this, it takes 2 steps, right? So one step, you have to get a break even in units, right? So then in order to do that, you have to calculate a contribution margin per unit, correct? So which will be this number, 2.16 divided by 180, correct? So 2.16, oh, no, 2,000, okay, 160K divided by 180K. So then, okay, then you use the, okay, 600K divided by, okay, contribution margin per unit. All right, so once you get this, and then of course the margin of safety in units will just be 180,000 minus break even in units. Okay, so that's for first one. Okay, so determine sales revenue that insure. Okay, assume, okay, so this, okay, is basically the target, right? So target profit, right? So then you use, okay, so then you need, so this is a target profit. So then you need to use the fixed expense, 600K, plus this is already pre-tax, right? So then you have a 1,800K, all right? And then divided by contribution margin ratio, all right? So how do you get this? Then you use the contribution margin to 160K divided by 864DK, all right? So it's basically contribution margin per sales. All right, so number 3, how many units should you produce and sell to yield after tax? So all you have to do just change this, right? So change, okay, the 133, okay, make that pre-tax, right? So this is, okay, change to, okay, pre-tax, then you can do exactly the same, okay? So I want you to contrast this with question 2, okay? You have different information, but you can always answer similar question. Alright, so, 12, okay, so 12 is basically degree of, leverage, okay,
got it.
degree of operating leverage.
Gotcha.
So that's a contribution margin over operating income, right? So you can calculate based on what you have, and then determine if the sales expect to increase 30%, so this is a DOL. And then, okay, so you can calculate that's a 30% times DOL, right? Now, okay, what will be the expected amount? Okay, suppose this is, okay, DOL is, if I have the number, then we are lucky, if I don't have the number, we skip, alright? So that is, okay, so we are lucky, okay, so we have 75%, okay? So this is, second one is 75%, so this is a 2.5, okay? So how do I get the expected amount? So then that will be the original operating income, multiplied by, 1 plus 75%, okay? So that is how you get the, okay, expected amount. Alright. Product break even, okay, so when you notice that there are multiple products, okay, so you need to figure out, okay, first you always have to, doesn't matter, okay, whether the fixed expense is separable or not. The step is always define your package, and then calculate your contribution margin per package, and use the total fixed expense
No way.
divided by the contribution margin per package to get a break even. Alright, so for in this case, okay, so this is something you can do 6, 10, 6, and 4, okay? So then your contribution margin per package, okay, I'm gonna use box because it has less letter, okay, so times 300, so you need to calculate contribution margin, right? So that's a 300, 400, and 450, right? So then 6 times 400, and then 4 times 450. Okay, so once you get this, and then break even in boxes, okay? So then that will just be 24,800 divided by contribution margin per box. Alright, so whatever the number you get here. Okay, so then do that. And once you get that, multiply by 10, that's basic, alright? And then you multiply by 6, multiply by 4. Okay, so it doesn't matter. So that's one way, okay, you can do this. And then you can also define the percentage as a 50%, 30%, 20%, that will be fine as well. Alright, I think that's all. Okay, I think I finished all. Alright, if you have any more questions, send me email or talk to the TA. My advice, practice, okay, so there's no other way. Go luck on the exam for cost accounting and go luck on the exam week, and happy
December.
and Merry Christmas.
Let me stop, bro.
I think I finished camera, I hope so.
Dude. I guess you on there, yeah, I know.